Hello everyone, welcome to Oliveboard. My name is Dinkar and I welcome you all in this session. I hope everybody is doing great, feeling healthy and fine. Good to see you again on the Mondays evening. As you all know that on every Monday we do the concept building series of basics of economy, and we have already finished around 26 lecture under this series, and today we have a 27th lecture under this. So today we will be talking about the climate financing. As you all know that there is a huge buzz around the world, like since 1992 when the Rio de Janeiro summit has happened regarding the Earth protection and sustainable development. So after that, there is a too much of issue regarding the climate financing, like who will do what type of financing and why we should need the financing and all these things. Okay, so today we will be discussing about the climate financing and why it is necessary, and who are the parties who are providing all these kind of climate financing that we all will be discussing. Okay, so just we'll be starting with our session right away. So today lecture is on climate financing, and first of all you should know that what is the exact need, what is the basic things regarding what is climate finance. Climate finance is a finance that aims at reducing the emissions and enhancing sink of the greenhouse gases, and aim at reducing the vulnerability of and maintaining and increasing the resilience of the human and ecological system to negative climate change impact. So that is why we need climate financing, in order to make sure that we should mitigate all the issues that will hamper our future generation with various type of issues. So we have to reduce emissions, we have to increase the sink of the greenhouse gases like forest and all these places, we have to reduce the vulnerabilities, and we have to also increase the resilience and maintain our ecological system in a proper healthy condition. So that is called our climate finance. And for all these things we need climate finance. Okay, so United Nations Climate Convention obligation to provide new and additional financial resources, and is a wider sense to refer all financial flow relating to climate change mitigation and adaptation. So whatever the finance that are coming related to climate change mitigation, if you wanted to mitigate the climate change, if you wanted to adapt any kind of climate change, so whatever the finance we are doing in order to do all these things, that is called as climate financing. Okay, now 21st session, very important session that has happened, of conference of party. Okay, so this was a very landmark judgment, landmark summit that has happened in the Paris in 2015. Okay, one is UNFCC, United Nations Framework Convention on Climate Change, UNFCC. So under that conference of party, we call it as COP summit, right? Conference of party summit. And as you all know that our prime minister last November only has went to there and to attend the conference of party summit. Every year this happens, but because of the COVID-19 it doesn't happen in 2020. Okay, so they have introduced a new era of climate finances, policies and market. Under the Paris Agreement adopted, they are defined a global action plan in the world on track to avoid the dangerous climate change, because there they have decided that if the temperature rises above 2 degrees Celsius, so there will be a catastrophic changes that will be happening to the earth. And because of that, every place in the earth will get suffer, the glacier will melt, biological diversity, huge losses we will get to the biological diversity, hunger, poverty, and all the things will be all related to all these things. Okay, so the main aim is to maintain the global warming temperature below 2 degrees Celsius to increase. Like, we do not wanted that global temperature should increase above 2 degrees Celsius, or more specifically they wanted to limit it to 1.5 degrees Celsius by the end of this century. Okay, above the pre-industrial level. So it also include the climate financing. So under the Paris summit of 2015, they have talked about climate financing. Like, okay, we wanted to reduce this emission, and we wanted to support the countries in all these efforts, but from where the finances will come, who will provide financing, and how the finances will be used, and which all places these all the finances will be used. Okay, so it includes climate financing channeled by national, regional, and international entities for climate change mitigation and adaptation. Okay, we need various projects, programs, so that they all need various type of finances for climate change. So wherever you wanted to invest, whether in Africa, Asia, Southeast Asia, wherever, so these are all the developing countries, and they need to invest in various other places if you really wanted to make them adapt to the climate changes. Okay, so they include climate specific support mechanism and financial aid for mitigation and adaptation activities to spur and enable transition towards a low carbon, climate resilient growth and development through capacity building and research and development and economic development. See, we need climate financing for all these things. Nothing can be done without the money. Okay, so money is required in order to do any kind of thing. Okay, so in November 2020, development banks and private finance have not reached even US $100 billion per year investment that has been stipulated in the United Nations negotiation that has been done for 2020, that by 2020 the developed world will be providing a $100 billion per year, but even till November 2020 that figure has not been reached. Okay, however, in the face of the COVID-19 pandemic economic downturn, around 450 development banks have pledged to fund green recovery. Okay, so once they have met with the COVID-19 pandemic, so around 450 development banks have came together and they said that they are pledging to fund the green recovery in the developing countries, because they really need a good amount of economic support in order to mitigate and adapt to the climate finances. So, and now they have realized that this is very important for the world to take to mitigate and adapt to the changes. Okay, so how can the climate finance support COVID-19 recoveries? Climate investment that support vulnerable population can provide immediate relief and social protection. So this is all related to COVID, like how the climate finance will help the recovery of the COVID-19. So it is provide the immediate support like social relief. They will help in improving the health, livelihood, and other social economic benefits. They will foster more equitable and inclusive green recoveries. Then in this period, there will be investment in clean energy, climate resilience, and forests can stimulate economic activity. They will also help in strengthening the sector. They will generate million of jobs also, and they will prepare for the future shock. Like if something happens, like similar thing happens in the near future, the how they are going to prepare for the shock if they are getting it. Okay, then coupling climate investment with the technical assistance also. So advanced climate friendly policies has to be developed. As you all know that India is developing a very good climate friendly policies, and India is providing subsidies in various type of renewable energy projects and various other things. Test and strengthen regulation through demonstration of the project, building institutional capacity and climate mainstreaming. Okay, so it will help boost green economic recovery, support vulnerable population, and strengthening the policies and institution. Okay, so financing climate action, like how the financing will be done. So financial resources and sound investment are needed to address the climate change. So finance is very important in order to make sure that if you really wanted to adapt to all these climate changes issues, so you should require a huge amount of financial resources to reduce the emissions, for helping and promoting adaptation that has already got impacted, already occurring, and to build a resilience. So the benefit that will flow from these investment, however, dramatically outweigh any upfront cost. Okay, now studies and reports conducted before the COVID-19 pandemic has shows that investment in climate action will go far to build a sustainable economy. So now, right now, in 1992, what we have discussed in the Rio Summit, now we are talking about that only sustainable economy. Okay, it is not like that you are doing whatever you wanted to do, you are doing any huge amount of emissions and all those things, and you will just simply get away with that. No, it is impacting the nature, and the things you are really seeing, like forests are burning, oceans are drying up, even the life below the water is also getting affected. The lands are getting there is too much of drought situation happening throughout the world. Okay, so the world will need to make significant investment in the infrastructure over the next 15 years, and they will be requiring around $90 trillion by 2030. So from where this money will come? This money has to be come from the developed world. The money has to be come from the developed world, because they are the maximum beneficiaries of all the development that has taken place. Okay, so but it can recoup this investment. Transition to a green economy, it founds, can unlock new economic opportunity. Like if you are transferring your economy to a green economy, we can think it of that it will create an another good opportunities for job creation, healthy living, and a cleaner environment. Okay, so it is said that around if you invest US$1 in the climate action plan or climate mitigation plan, it will yield a US$4 benefit. That means if you invest US$1, then you will get a benefit of US$4. So this is a benefit. Four times of benefits you will get. So why not go green? Because it will require 90 trillion for infrastructure only by 2030. But the thing is that it will yield, if you have invested this much of thing, then you will get a benefit of $4. That means if you are investing $90 trillion, so you will get around four times of that. Now, $540 trillion of in $540 trillion of benefit you will get if you are investing in this. Okay, so we need bold climate action plan deliveries like around $26 trillion by 2030. And green energy makes economic sense, and we have to replace the costliest coal with solar and wind would stimulate around $940 billion in investment. So around $940 billion of investment is required only in the solar and wind power sector, because these are the sector which are very important if you wanted to do transition from fossil fuel based economy to the green energy technologies. Okay, so that much of investment is required for achieving that purpose. Okay, then Paris Agreement on climate change. So developed countries have committed that they will provide $100 billion in climate action for developing countries every year, but that $100 billion per year has not been met till now. Okay, so developed world is not doing the work that they intended to do, because in the Paris summit, it has been decided that around $100 billion per year will be provided by the developed world to developing countries so that they can adapt all the green technologies. So the technologies transfer will happen. They will adapt to solar, wind, and everything they will get. But still, this $100 billion has not been achieved. Then adaptation pays off. Like if you adapt the things, how it is work. So if you are investing around $1.8 trillion, it could generate around $7.1 trillion. Okay, in the near future. So, 5 areas are there: early warning system, climate resilient infrastructure, improved dry land agriculture crop production, global mangrove production, and all these places are there which are very good. If you are investing all these places, if you wanted to protect all these places, it will generate an additional income to the people. It will provide employment to the various people and all these things. Then finance gap. See, we have discussed about the finance, but there is a huge gap that is happening in that. Okay, so the estimated of the climate finance gap, that is the shortfall of the investment, vary according to the geography, sectors, and activities included, time scale, and phasing targets and underlying assumptions. So every year we meet at conference of party summit in various other places. Every year some other countries are the host of this conference of party. They decide how much money is needed, what all technologies has to be transferred. But actually it varies according to various type of geographies, like which country require what kind of resources, under which sector they wanted to do the work. Okay, then regarding the time scale and phasing life, like if India has said that by 2050 we will phase out coal. Okay, but right now in COP26, right now that has happened at Glasgow, Prime Minister Narendra Modi has said that we will phase out our coal by 2070 because we need additional 20 years for that purpose. Okay, so in 2010, the World Bank report primarily estimate that of financing need for mitigation and adaptation activities in developing countries, we need around $140 to $175 billion per year over the next 20 years. That has been said in 2010. Okay, with associated financing that has to be need of $265 to $565 billion. Okay, so these are the type of things that has been required to adapt all the things. So billions of dollars is required, but the finances are not available. Okay, so the International Energy Agency's World Economic Outlook estimates that in order to meet growing demand of energy through 2035, around $16.9 trillion of new investment for new power generation projects with renewable energy comprising 60%. That means if you really want the world to focus on renewable energy, like if you want that total world production of renewable energy should be 60%, so additional $16.9 trillion is required for that. Okay, so that is also a finance gap. Okay, so the capital requirement to meet projected energy demand through 2030 is amounting to $1.1 trillion. So every year we need a finance of $1.1 trillion on average, if we distribute it almost evenly between large emerging countries like China, India, Brazil, and including other developing countries. The IEA, International Energy Agency, has also estimated that limiting the rise of global temperature below 2 degrees Celsius by the end of century, it will require $3.5 trillion per year in energy sector only. In energy sector only, it requires $3.5 trillion of investment till 2050. Then only we can limit the temperature below 2 degrees Celsius by the end of the century. Okay. Then what are the multilateral climate finances? What are the multilateral climate finances are there? So the multilateral climate fund that is governed by multiple national government are important for paying out money in climate finances. So the largest multilateral climate funds are: first is we have our climate investment fund, second we have green climate fund, third is adaptation fund, and fourth is global environmental facility. So these are the places which provided fund to developing countries, underdeveloped countries, in order to mitigate the changes, to adopt the climate technologies, new and renewable technologies, and all these things. Okay, so here if we can see that global environment facility is there, then least developed countries fund is there, a special climate change fund is there, adaptation fund is there, clean technology fund is there, strategic climate fund is there, and green climate fund is there. Okay, this has been taken from WRI, World Resource Institute. Okay, so in 2016 these four funds have approved around 2.78 billions of a project support. So this 2.78 billion is very less. Okay, India received the largest total amount in a single country support, followed by Ukraine and Chile. Tuvalu received the most funding per person, followed by Samoa and Dominica. The US is the largest donor under this four fund category, while Norway makes the largest contribution as per the population size. Okay. Now, most multilateral climate fund use a wide range of financing instrument. They can like, what are the financial instrument that people use? They can give grants, they can give as a loan, they can give as a equity share, they can give as a risk mitigation option. Okay, like if we say that if we go to Brazil and if we say that please do not cut forest, so Brazil will say that okay, we will not cut our forest, but you have to pay this much to us so that we do not cut the forest. Okay, so these are some kind of risk mitigation options that are available. Okay, so these are intended to crowd in other sources of finances, whether from domestic government or other donors or a private sector. So the Climate Smart Urbanization Program, that is the initiative of Climate Investment Fund, mean to support the cities. So this Climate Investment Fund has been important in climate financing since 2008. So that is only helping the cities area of that. Okay. Now, what is Green Climate Fund? Very important fund that has been set up. So Green Climate Fund has been set up in 2010 under the UNFCCC, United Nations Framework on Convention on Climate Change. Very important fund that has been set up is Green Climate Fund. It is like a financial mechanism to channel the fund from the developed countries to the developing countries. Okay, right now it is the largest multilateral climate fund, and climate change and development participation alike are focused on seeing these resources flow. Okay, so Green Climate Fund is the largest multilateral climate fund that is working on under the UNFCCC, under the Conference of Party. This has been set up under UNFCCC. Okay, so then comes our Global Environmental Facility. This is also a very good fund that has been set up during the Rio Summit that has happened in 1992. Okay, so the headquarter is based on the Washington DC. The Global Environment Facility is jointly managed by the United Nations, UNDP, and United Nations Environmental Program. So under all these things, this fund is managed by all three organizations altogether. Okay. Under the Global Environmental Facility, some of the focus areas are they act as an independent operating financial organization. There are 6 designated focal area. They are looking for proper biodiversity conservation, mitigate the climate change, international waters issues, ozone depletion layer, and land degradation and persistent organic pollution, POPs. Okay, so under all these 6 places, Global Environmental Facility is providing funds to various countries under these 6 heads. Okay, so now the third one is the Adaptation Fund. So that has been established under the Kyoto Protocol of the United Nations Framework on Climate Change. Normally, it finances projects and programs that helps vulnerable communities in developing countries to adapt the climate changes. Okay, it helps the vulnerable communities. So this adaptation fund is an initiative and based on the country need, views, and priorities. So that is why on the basis of that, what are the country needs, what are the country views, what are the country priorities, based on that adaptation fund provides the various kind of funds under this category. Okay, financing, the fund is financed in part by the government and the private donors, and also a 2% share of proceed of the certified emission reduction that is issued under the protocol Clean Development Mechanism product. Okay, so normally this adaptation fund is mostly funded by the government and private donors, and also whatever they are getting from the certified emission reduction proceeds, 2% of that they are also giving under that. Okay, so climate financing by the world's 6 largest multilateral development banks rose to 7 years high to around 35.2 billion in 2017, according to IRENA, Renewable Energy Agency. The global energy transition could contribute around $19 trillion in economic gain by 2050. Like, if we are transiting to our economy to cleaner energy and renewable energy, so by 2050, if we are doing all these things, it will give us a gain of $1 trillion by 2050. Okay, so most of the places they are talking about, like, if you are investing right now in the cleaner technologies, what gain you will get in the near future. Okay, so the European Investment Bank has provided euros 170 billions in climate funding, which has funded over around euro 600 billion in program to mitigate emission and help poor respond to the climate change and biodiversity depletion across the Europe and the world. That is done by the European Investment Bank. Then till now we have discussed about the multilateral banks and all those things, but what about the private climate finances? What about the private climate finances? So public finance have traditionally been a significant source. Obviously, the government only will look for these climate mitigation plan, because why people should invest in the climate action, because they said that it is not done by me, right? So whatever happening throughout the world has to be taken care by the public finances, like government has to work on that. Okay, however, the issue is that the public budget are very insufficient, and often the insufficient for large and complex infrastructure project. Like, even if we wanted to build a dam, even if we wanted to build a huge solar plant, it requires huge amount of money, technologies, various kind of expertise. So there is not much money that is available in the public purse. That means in the government account there is not that much of money, because government has also to take care of the other sectors also, right? So because of that, government is not able to properly finance all these projects. Okay, so private investor could be drawn to sustainable urban infrastructure project where a sufficient return or investment is forecasted. Like if you can attract the private investor also, if you can show to them is that like if you invest in this project, you will get sufficient return in the future based on the forecast, how the project income flow. Okay, like if you say that if you invest in this solar plant project, okay, if company has been built solar plant project, you if you invest over here, so in the near future you will get this much of return. If we go to the share market and we just list our company of a solar plant in the share market, you will get this much of return. Okay, so in this way we can attract the private investor. Then bankability and credit worthiness are therefore prerequisites to attract the private financer. Like if you really wanted to attract a private investor will only invest in a places where they thinks that yes, that person or a company is credit worthiness. It is not like that if the company has taken the money and just gone with that. Okay, so only the credit worthiness companies should attract the private investor. Okay, so right now in our country the major things are done by Tatas. Right now Adani is working too much in the wind energy project, then our solar energy projects and all these places. So these are the very credit worthy companies are there. Okay, so they can attract the finances, and that is why they are getting too much of investment in their places. Then potential sources of climate finances include like commercial banks you can utilize, investment companies are there, pension funds are there, huge amount of pension funds are there, so you can utilize that also. Insurance companies, sovereign wealth fund, all these funds are there from where you can utilize the fund, but you have to show that you are credit worthy, and then only they can provide you with the proper finance. Okay, so private climate finance, supply of finance and demand for finance. So example, SME projects, developer, corporates, infrastructure, development of new products, new expand market, cost savings, secure supply chains. Okay, then private finances, different preferences, private individual, household, bank, venture capitalists, institutional investors. Okay, what are the risks are there? Technologies, operational, policy, regulatory, information gaps, financial market, climate risk, all these things are there. They always check all these things. Okay, now we are moving to the climate finance in India. How in which all places we are investing, like from where we are getting the climate finances and all these things. First of all is that we are getting money from the union budget. Then we are getting the money from the state budget. Then some climate funds are there, NCEF, NAF, NDRF fund are there. Kampa is related to the forest. How they are funded? They are funded by the union budget and the cess which is charged. Like if you are utilizing some kind of coal, then you have to pay some amount of cess. Like 1 ton of coal, you have to pay this much of cess. Okay, so from there they require they take the resources and they fund all these organization. Then private climate funds are CDM, debt finance, private equity, venture capitalist people are there who are providing private finances, but you have to tell that you are really credit worthy and the project is a success. Okay, then comes our international climate finance, multilateral funds are there, bilateral funds are there, international private finances are there. Okay, then budgetary support to national mission, budgetary support to other climate strategies. So these are all the places through how India is financing the climate change throughout the country. Okay, so but still India is under the developing stage, and India requires huge amount of climate finances from various type of organization, from private, public, international organization, international governments. So India keeps on asking for technologies, funds, because India has set a target. India has given a target in the Paris climate is that India by 2030 will be running on 40% renewable energy. 40% renewable energy, and India will reduce their carbon intensity by 33 to 35% by 2030 based on 2005 level. Okay, and India will create an additional sink of carbon 2.5 to 3 billion tons of CO2 carbon sink to absorb the additional carbon in the atmosphere. So this has been given by the government of India in the Paris Climate Finance, and this time in COP26, Prime Minister has said that we will phase out our coal by 2070. We will be phasing out our coal by 2070. Okay, so these are all the ways through which we are requiring our climate finances, and it's still not lot have to be done in order to properly mitigate the situation. And the main goal is that we have to make sure that by the end of century, like by 2100, the climate should not go above 2 degrees Celsius, or more specifically it should remain below 1.5 degrees Celsius if we wanted to mitigate the catastrophic effect of the climate change. Okay, so guys, this is all for today under the climate finances. I hope you have liked the lecture. Thank you so much for joining the session, and today I just wanted to tell you that at 9 p.m. we are doing RBI Grade B 2022 revision of current affairs. So this will go on for 9 days. Okay, this will go on for 9 days. So I would request everybody to join that, because this is a fast moving revision course. So we will be just telling you what are the important things that you have to remember for examination. Okay, so please do join at 9 p.m. today. Okay, so it will go on till 25th of May. Okay, so guys, thank you so much for joining the section. It is really good and great to see you that you all have joined. Thank you so much, and please make sure that you follow all the COVID-19 protocols. Thank you so much. Bye bye, take care, and I will see you at 9 p.m. today. Bye bye.